Chris Mancini, analyst over at Gabelli Gold Funds. Good to catch up with you yet again.
Yeah, thanks, Danielle. Yeah, great to be here.
We're at the one-to-one conference here in New York City, fresh off the panel I moderated. Thank you for taking part in that. Do you come with greater optimism than the last time I spoke with you when you referred to the market or made the analogy of gold to a coffin being lowered into the ground? That's just in my brain. I can't forget that.
Yeah. Well, last time, I think it was around a month ago, gold was around maybe 1270 or something.
We're doing
like
better
that.
today. Today's a good day.
It's a lot better. I mean, and it is amazing. So, right, I was saying that we were kind of like a coffin getting lowered into the grave and one step up. And I think that now we're kind of halfway up. We're kind of halfway out of the grave, maybe.
Undertaker. Undertaker said.
And things have changed from a macro perspective too.
Things have changed, and gold getting a bounce this morning. We're speaking here Tuesday after Powell's remarks saying that the Fed has taken notice of the trade war talks. Gold benefiting from this. How is this going to play out here, Chris?
I think that the big picture story on gold has always been and will always be the fact that it is a asset, a currency which can't be replicated and can't be created at will like other currencies. So if you have the Bank of Japan and the ECB are both printing money, and then there's a view that the Fed is going to start to lower rates with the view that maybe they could start printing money again too, gold's gonna start to glitter again in terms of being that one asset that can't be replicated, and I think it'll catch a bid. So the market's pricing in a probability now of that eventuality. Very small probability, but it's pricing that
So
in.
more so than the US dollar?
I mean, I think that's, well, what's happened in the past has been that the ECB, BOJ printing money, the Fed actually raising rates. So the dollar has been strong, and that's been bad for gold as market participants have been buying dollar futures, selling gold futures, selling gold out of ETFs. And so the real play again is when you have all three currencies doing poorly. So if you have the dollar, the yen, and the euro, in a scenario where they're all printing money, then the dollar should hopefully weaken, and gold should do well.
How does Bitcoin factor into this for you, Chris?
I think Bitcoin it's similar. It's a store of value. I mean, it's the kind of thing which can't necessarily be replicated in its current form. But the issue with Bitcoin is that, first of all, global central banks are not going to buy Bitcoin. So the Chinese central bank is buying gold, and the Russian central bank is buying gold. They're not going to buy Bitcoin. And the other thing that's crazy about Bitcoin is the concept of these forks that are created off of Bitcoin. So there's Bitcoin Cash or Bitcoin Gold has been created off of Bitcoin. So the concept of coming in and buying a gold coin down the street here on 47th Street, putting it in my sock drawer, and having another gold coin one day, that's crazy. So that just can't happen. But with Bitcoin, it can. You can have another piece of Bitcoin created off of Bitcoin. So the big picture is that Bitcoin has been corrupted. It's been corrupted because it's a creation of man, and gold cannot be corrupted because gold is a creation of God.
A lot of people would debate you on that very thing, Chris. So how do you view Bitcoin? And is it a safe haven for you? Is it a currency?
Bitcoin it's a means of payment, and to the degree that it's a means.
So you don't touch it, right? You don't like. What happened? Okay, what about the cryptos that are backed by physical metals?
I mean, that's just another way for someone to buy. It's using blockchain to buy physical metal, which is great. I mean, people should buy.
So you like the miners?
Yeah.
Okay, so let's talk about that. Who have you bought, and what do you like right now?
So the names that are core in our portfolio are the ones that are the bigger names, generate free cash flow, and have catalysts. So it might sound unimaginative, but Newmont and Barrick both are big names, generate free cash flow, pay dividends, and have catalysts.
Okay, but people are watching this are going to say, tell me something I don't know, Chris.
Sure. So other ones that we like, there's one, we've been buying Sentiment. Centamin has a mine in Egypt. It's a producer.
Okay.
It produces around 500,000 ounces of gold per year. They had some issues last year with underground mining. I think that those are mostly fixed. And it has cash on its balance sheet, no debt. It should be a low-cost producer if they do get the underground fixed. A big mine with lots of resources.
When you were doing your analysis, what made you focus in on them that made you think, hey, this is different?
Because that's a stock, it's a company that's cheap because they had issues with their mining a year ago, which I think are fixed. And then they also generate free cash flow. They pay a dividend from the free cash flow that they generate. So this year they could pay around, on the current price, maybe a 5% dividend yield. And they have a net cash balance, which they can use to build another project or to expand their mine in Egypt.
Speaking of issues, can Hecla turn it around?
Hecla, we don't own any Hecla. Hecla has issues. I mean, the Lucky Friday mine is still on strike from what I understand. The Klondex acquisition turned out to be a little bit of a dud. I personally wouldn't buy Hecla.
I got a lot of questions on Hecla, so I had to ask. Chris, thanks so much for stopping by.
Okay, thanks.
And we'll see you soon.
Okay, sounds great.